Alright folks, here we are on Friday, August 9th. Had a little pullback today, which is normal. Yesterday, market was up, 371. Today at one point the Dow was off about 275, at least I saw. It could have been down 300, but we ended up down 90 points. S&P down 19. And you know, it's pretty fascinating to watch because it is the same behavior over and over and over again. People trying to trade the headline. Not trying, people trading the headlines. To which I say, please continue, because all that does is put money in my pocket and puts money in the pockets of my subscribers. It's really kind of a fascinating thing to watch. That's the old Einstein definition of insanity. You keep doing the same thing over and over again, hoping for a different result each time. So, I don't know. Trump has been threatening or imposing tariffs or trade wars since, what, February of last year, March of last year, something like that. And the stock market is significantly higher. We recently came off all-time record highs, which each time, every episode that we have been through, I have been saying you got to buy that dip. Now, what makes me say that? Am I a perma bull? No. It's very clear. The methodology that I use, it is based on the amount of fiscal support, and more recently we have, or I have found, very, very tradable reserve. The reserve flows, as you know, is something that I've been talking about. Caught all of these corrections and all of the turns. Now, August 8th was a date I spoke about yesterday. Actually, it was a date I spoke about on June 26th, which was the very date I said that was a reserve trough. The market would have a hard time moving higher in the period from the trough to the peak. I said on June 26th that August 8th would be the peak and we would start back up again, and yesterday was the first impulse of that rise. Now, it's actually good that we had a little bit of a pullback today. We have seen already 6 days in a row of the put-call ratio. If you follow that above 1.0, that means more put volume than call volume. Everybody's very excited, everybody's very fearful, everybody's very nervous, but I will tell you this. And by the way, in the weekly American Association of Individual Investors, their weekly sentiment survey, those numbers were off the charts. Off the charts in terms of pessimism and bearishness. I'll tell you this, folks, and you may not believe it. I know a lot of people here, and it's fascinating. Just the instilled negativity, the kind of like deeply ingrained negativity of most people, I have to say, and the fearfulness, the fear. The deeply ingrained fear. They want to believe in the crash. They want to believe in the collapse. So maybe I could remember going back when I was a floor trader in my early days. I mean, that's all I tried to do was sell the market, sell the market, sell the market. I don't know why, and I found that to be a common trait among us floor traders. I mean, we love to sell the market, and it was the wrong thing to do. It was the wrong thing to do. But anyway, that's neither here nor there. I was talking about the AAII weekly sentiment survey. Numbers off the charts in terms of negativity. Now, I will say this, that ultimately we will see the market go to levels, high levels, that will make even me a skeptic. All right, we're going to see people who have been on the sidelines or negative for a long time become wildly, wildly bullish. And I'm willing to change that point of view if I see something of a fundamental nature which changes. The trade BS, that's just not going to do it for me. I mean, so far since the tariffs have been enacted, we have seen approximately a 0.3% cut off of GDP. We're still growing above 2%, and actually if you average the first quarter growth of 3.2 and the second quarter growth, we're running about 2.5, 2.6%. It's not too shabby. That is not too shabby, particularly given all the fear that is out there. The fear becomes, it goes from an intangible thing to a tangible thing, because you have people running businesses, could be CEOs, who also get affected by that, and they pull back. They pull back their investment intentions, they pull back their hiring intentions. So despite all this stuff, still positive growth. And that goes back to the historic amount of fiscal support that we are getting. And again, the stuff that I do is real time. I mean, we track these numbers every single day. They come in every single day. This is not something where I'm sitting there waiting for the number that happened 30 days ago or last quarter. The kind of analysis that every other economist uses. And as far as those reserve flows are concerned, again, to repeat myself ad nauseum, when you know, and this goes back to my days as a floor trader. I mean, we used to try to get cozy and friendly with the guys working the very deep order books. Hey, you know, where are your buy stops? Where are your sell stops? You know, who's this guy working for? Morgan Stanley, Goldman Sachs, Solomon Brothers at the time, Merrill Lynch at the time. We knew they were capable of big orders. And when we saw those guys come into the pit, or when we knew what was on their deck, where they had the buy stops, where they had the sell stop, I mean, that was money in the bank for us. That was money in the bank. Now, that was kind of quasi-legal, all right? You really weren't supposed to, there wasn't any front running. You weren't supposed to front run. There wasn't a specific rule on that. We took advantage of that. But what I'm talking about is totally legal. It's public information. It appears to me like not a lot of people are really interested, which is fine. You know, I've always been asked by people, well, Mike, what do you think's going to happen when everybody catches on to MMT? It's going to dilute the effect. No, because they're not going to catch on. They don't want to catch on. Very few people do. It runs against their grain. It runs against their religion. Same thing with the reserve flows. I could sit here all day and say, folks, I've got the information and the understanding and the knowledge to make money on on these moves, these billions and tens of billions and hundreds of billions sloshing in and out, which is just as good, if not better, as these guys running these algo shops, spending 10, 15, 20 million dollars to put their servers next to the CME or the New York Stock Exchange. I don't need that. But as much as I say that, you're going to have the vast majority, I want to be like the algo shops. If only I could do that. Wow. You don't need it. Everything's for free. Knowledge costs, however. I got people who understand that. They come to me, they sign up. Everything's better. Oil back up 2% today, got up close to 55. We were buying that dip, as I said back on Wednesday when I sent out my EIA weekly analysis of that report. Now, there were some things, by the way, and I talked about this. I said the negative thing in that report was exports. It was a problem. There was definitely a fall off in crude exports. Now, today I sent out an email early this morning saying, some of the data I look at, which comes from the Fed of all places, and again, you're going to have to sign up to understand, to get a better idea of what I'm talking about, but I sent it out today. I said it looks like exports are picking up. It is bullish for oil, and boom, what happened? A couple hours later, there was a breaking news story that says the Saudis are back. I'm sorry, not the Saudis. China is back buying its first cargo of U.S. crude since the tariffs were announced. But we already had that information. You see, folks, we're just standing here with a bushel basket collecting all the money. All right. Have a great weekend. You can always go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader or Zombie Trading. Got my courses on there too. The Forex course, Understanding the Daily Treasury Statement, best 99 bucks you'll ever spend, and MMT Value Stock Selection. Have a nice weekend. Bye-bye.